I recently took out a $44,000 home equity loan. Why in the world did I do such a thing? Does this make financial sense? That is what we're going to be talking about today. Hey, what's going on? Welcome to the Flaming Profits YouTube channel, where we teach you how to become a more profitable investor and financial education overall. So we've always heard that debt is bad, but there's actually really good kinds of debt, and I'm going to talk about a recent loan that I took out, a home equity loan, and what my plan is to do with this. So make sure you subscribe, that way you do not miss out on any upcoming videos. Thank you all so much for all of your support. Let's try to get 800 subscribers. That's the next goal. Overall, I'm trying to reach 1,000. So please help me out with that. I would really appreciate that from you. Please make sure you like this video as well. It really helps out. This video gets shared. And also leave me a comment down below on what you thought of the video. Now I do have some links for the free money, free stocks. They're all gonna be in the description down below. Discover's gonna give you a $50 sign up bonus as soon as you sign up. No reason not to do it. Now let's get to the video. Alright, so I bought my first home at 21 years old, and I have a video on that if you want the details. But basically, you have two loan options once you have a home. One of them is a home equity line of credit. This is basically like a credit card where you're able to charge anything you want on it, and then you can pay it off, and then you'll have the available balance back as soon as it's paid back. So like it says here, borrow again and again without reapplying. And it does have a deadline of 10 years. Some of them are different. You just have to shop around. The thing with the home equity line of credit is that it has a variable rate. So it's not going to be a fixed interest. It's going to fluctuate based on the market. So interest rates are always changing. So the interest that you're going to pay is always going to fluctuate. This can be a very bad thing because just because you have a low interest rate right now, it could actually get to 8%, 10%, who knows? It's all indicated by the market, so you could have a really high interest rate over time later on. You only make payments on the amount that you borrow, so if you don't spend any money from the home equity line of credit, you don't owe anything. And yeah, it's basically just used for security. In case something comes up or you need to make an expense, you can usually use your home equity line of credit. And usually home equity line of credits are a better type of loan because they're usually lower interest than having to charge this on a credit card. Now let's talk about a regular home equity loan, which is the one that I took out. So this will basically allow you to reduce the term of mortgage and build equity faster. So you could just take out a home equity loan and use that to pay off your mortgage. This will only be beneficial if the home equity loan has a lower interest than your mortgage loan. You can also use it to pay off debt, and you apply once for it and it's just a fixed rate, so it doesn't fluctuate, and once you pay it off, the loan is completely done, so you can't reuse that money. It's just a one-time loan. So this is the one that I chose, and let me show you the terms that I agreed to in my closing contract. Okay, this is the closing disclosure. So I recently took out this loan. It's a $44,000 loan amount, conventional, and it's a 15-year fixed rate. So I'll have this loan for 15 years. The interest rate that I was able to get is 2.75%. So this is one of the most important things about getting a loan. You want to make sure the interest rate is very low. The monthly principal and interest is going to be $298.51 every month. So for 15 years, I have to pay $298.51, and then this loan will be completely paid for. So what does the interest rate mean? How much am I actually paying per month, per year? Or how much will I pay in total after the 15 years just in interest? Now I definitely don't have the accounting skills using Excel like Citizen of the Year, but this is the numbers laid out and the calculations that I did. So they gave me $44,000 and the total cost will be $53,730.17. So this means that I'm gonna pay them more than what they let me borrow. But let's do the math and see how this actually makes financial sense. So after the 15 years, the total interest that I will pay in total for this loan is $9,730. So you might be thinking, are you crazy? You want to pay $9,000 extra? But here's the reason why this makes sense. Breaking down this, the yearly interest that I will pay for the $44,000 is going to be $810.85. Now let's break this down even further so that you get a better understanding. So $810 every year in interest. The monthly interest is going to be $67.57, and then the daily interest, which is the most important, is going to be $2.25. So the total return on investment needed to pay off this loan in the 15-year mark is only 22%. So I essentially just need to make 22% on the 44,000 in order for me to break even. And in conclusion, I only need to make 1.46% every single year. Okay, so now that I know that they'll charge me 1.46% every year, what can I do to make more than what they're charging me for the $44,000? So one option is investing it in the stock market. For example, the S&P 500 has averaged around 10% every single year. So essentially, just by me borrowing the money and investing that money in the stock market myself, I will be making around a 10% per year, and they're only charging me around 1%. So that leaves me with a 9% profit. So pretty good. This is borrowing money to make more money than what they're charging you. As long as you make more money with the borrowed money, then that makes financial sense to me. So this is my Robinhood portfolio. Let me give you an example. So you know how the charge every month for the interest is $67? Let's take a look at the profits here. So just even with Dogecoin, I already have $86 in profit, and look at the percent returns. Remember how I said I only need to make 20%? Most of these investments are already there or are very close to reaching 20%. So yes, by you just investing that money, you're gonna make way more than what the bank is charging me. Let's take a look at my retirement accounts. Some of these returns are way above the 20%. So I could literally just put the money here at 52%. So yeah, that's how you do it. This is how you become rich, by borrowing money that is not yours and making more money than what they charge you to borrow it. The second option would be to invest this money in real estate, which is actually what I'm planning on doing so. Alright, so there we go. That is essentially how I got a $44,000 loan for free, and at the same time make more money for myself with borrowed money. This is how you borrow money and create wealth with it. So yeah, there's a lot of strategies that you can use to build wealth and improve your financial well-being. Make sure you subscribe, that way you do not miss out on any upcoming videos. I really appreciate all of your support. Make sure you subscribe, like this video, and leave me a comment down below. I'll see all of you in the next one. Peace.